Today is Monday, April 23rd, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Alan, let's start with the stock market this morning. Stock futures have performed well since the lows were made on April 2nd, in spite of concerns about Syria and trade tensions with China. What is the outlook for stock futures now?
Well, actually, it appears to be improving. And one thing that has caught the attention of traders is earnings are coming in extremely well, much better than anticipated. In fact, now it is estimated that first quarter earnings will probably be up 20% from the comparable period, and that would be the best gain in 7 years. So the outlook, in spite of these geopolitical problems that are, of course, ongoing, still looks encouraging for the stock indices.
So remove all the noise and the earnings for corporate profits look good.
And it's not just the earnings. We also have the interest rate environment that is still accommodative, still supportive in spite of the rate hikes that we have seen from the Fed and others. But from a historical perspective, interest rates are still very low.
Last week it was reported that housing starts increased 1.9% in March from the prior month, when a 1.6% increase was expected, and residential building permits were also stronger than anticipated. How does this affect Fed policy?
Well, it goes in line with the thinking that the U.S. economy is improving. It still appears that the Fed will not raise rates at the May 2nd meeting, but at the June 13th meeting, it is extremely likely that the Fed will raise by 25 basis points to 1 3/4 to 2%. So there's a very strong probability of higher rates in June and maybe one more in December.
Let's touch on the greenback for a moment. The U.S. dollar is higher today and is at the top of a 3.5-month trading range. Why has the greenback not performed better, especially since the FOMC increased interest rates in March and another rate hike is very likely in June?
Well, it appears, for one thing, that other central banks are becoming less accommodative, or in other words, are becoming a bit more restrictive, as is the Fed. But I think a very dominant theme is that any time the dollar index has advanced to a certain level, we have President Trump coming in with some negative dollar comments. So there is some speculation that the administration may have a weak dollar policy. So that should put a ceiling on the dollar index on rallies of this nature.
Let's turn to the grain markets. Steve, weather's getting a little better. What's the latest on U.S. weather?
First of all, over the weekend, some of the southern plains got some rains that they were hoping for. Not quite as much coverage and amounts as they were first forecasted. And now the jet stream looks like it's going to start moving north seasonally, and that should allow for U.S. farmers to get corn planted and spring wheat farmers to finally get into the field.
What about the grain market trend, fund position, technical signals, things like that right now? What do those look like?
The market is turning lower. The bean market, I think, is worried a little bit about the China trade and what exports we might ship to China from the United States. Last week, they were big buyers of cargoes of soybeans. All of them were from Brazil. The last time that beans traded below the moving average support, we dropped about 50 cents from that level. In the meal, we're trading below a support line for the first time since January, which means we could pull back $10 or $15 a ton. Corn market is kind of stuck in a trading range. We can't rally because there's too much last year's supply, and farmers will be getting in the field, but really can't break too much because we do have strong demand underneath the market, and we've got a lower South American crop. Chicago and Kansas City wheat turned lower with this rain event, and we'll just see how low is low. Next week is a big annual wheat tour of Kansas, and they'll be able to give us a better idea of what the crop looks like. Minneapolis wheat is also lower because of the chance of planting, but big picture, wheat has trouble rallying because of the big Russian supplies.
Let's expand a little bit on the China-U.S. trade issue. You say China's buying beans from South America right now. Is this issue starting to fade into the background somewhat, or do you feel that this is the thing that a lot of agriculture is still talking about?
I think we're just starting to talk about it because I think that the Chinese are not going to give on a couple of key issues in the negotiation, and eventually it looks like they will put these tariffs on. I think Brazil's going to have a record soybean crop this year. They can increase production, so I think China's hoping that they can buy more and more beans from Brazil and less from the United States. Last week, a lot of press talking about 5 cargoes of sorghum that was on the way to China that had to turn around and go to different origins. And so I think the trade issue between U.S. and China from an agricultural standpoint is not going the right direction.
One of the issues that people are concerned with is the intellectual property issue. I believe 301. Can you expand on that a bit?
It's just right. Basically, when you look at the trade, China sends about $500 billion worth of goods here, and they buy $100 billion worth of us. And there is some concern that they have stolen some intellectual properties from us. The Chinese believe that they have not, and so that's one key issue in which they will not negotiate about.
See, let's talk about the next USDA report. What will they say?
This could be a volatile report in the marketplace because this will be the first time that they look ahead for 18 and 19 for U.S. and world supply and demand. Some people think that they might add to the wheat and bean numbers, and which would be bearish, and they might lower the corn numbers, which could be bullish. It's also the first time they come up with a U.S. winter wheat crop number. So sometimes this May 10th USDA report is pretty volatile.
All right, remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.